welcome all of you to join my webinar in this time. And if you know, otherwise, if you have questions, Q&A window that you can type all your question here as well. And I have a few people emailed me their questions beforehand. So I am going to answer all the questions at the end of the webinar. Well, first, this is really unusual time. I know many of you have a lot of anxieties and a lot of questions. Let me see how I'm going to talk. So I want to take this opportunity to share with you the information I have and help you to understand what is going on, at least in the real estate market here in Santa Clara, and hopefully that's going to be helpful for you. So that is said, first, I want to go over the market before the outbreak so you can see where we come from. That's going to help you to also get better understanding of what might be the market after that. So first, before this virus outbreak, the Santa Clara, the whole California real estate market is very good. As you can see, the latest data for February shows both the sales volume as well as the sales price all go higher. Sales volume-wise, single-family house in February up by 6.6% compared with January and up by about 6% compared with same time last year. Pricing-wise, median price, it actually went higher in February compared with January, and so way higher compared with last year. Bear in mind, these are the statewide numbers. So once we get to the Santa Clara number, you're going to see it's even higher than the statewide number. So statewide inventory is also much lower. It's reduced by 1 month, which means the houses on the market takes 3.6 months to get sold in February, compared with about 4.6 months in February last year. It's very similar as the number in January. Now, that's the number we see. And as you can see, my next slide, I show you in Santa Clara, in Bay Area, you see the median price actually went up by about 5%. The active listing went up a little bit in February compared with January. However, one thing that's very interesting is the inventory, the listing is continuously going down since September of last year. And it went down quite a lot. The number of active listings decreased an average of 21%, almost 22% compared with last year. So inventory is lower compared with last year. Pricing goes higher, inventory sold very fast. And all of this contributed to the quick sale of the housing back in January and February before the virus outbreak. Here, I want to share with you the Bay Area number. As I mentioned to you before, overall California state is very healthy January and February, and Bay Area we're even more competitive back in January, February. As you can see, the 3 counties here, San Francisco County median price in February compared with January is about over 10% increase. Compared with last year is also about 7% increase. San Mateo County is 10% increase month to month and 10% over 10% increase compared with last year. Now, Santa Clara County, look at this number, it's really amazing. It's about almost over 12% compared with January, and it's over 15% compared with same time last year. Bear in mind, 2019, the market is actually quite slow after the craziness in 2018. So 2019, we actually went into a slow market, and then we just had some recovery in January and February. So these are the numbers in Bay Area. As you can see, it's very amazing. And inventory and time to sell, Santa Clara County, February, the unsold inventory index is only 2.7, which means it takes 2.7 months only to sell all the houses on the market. And that's compared with over 3 months last year. And the time on the market, as you notice, is extremely fast to get sold. In February, it's 8 days, and compared with about 12 days in February last year and about 19 days in January. So as you notice, all of the numbers are very healthy, all good. Now, and then we have the pandemic happen in March, and then we get into the shelter in place March 17. So I want to show you the change at the state level impact. So number one, for state level impact, now we had most recent update from the state, California Association for Realtors. Our president, Gene Redsick, that's his quote basically, because of this pandemic, that she sees market is likely to decline in the next few months, and particularly in counties and cities where the shelter-in-place is in mandate. And also, we have our chief economist, Leslie. Leslie also said that the economic impact of the coronavirus pandemic becoming more pronounced because of the uncertainty in financial market, because of consumer spending, because unemployment data that all happened had impact. So it's likely to get even worse in the near term. Just pay attention to the word, it's in the near term, okay? Because both the sales and price are likely to, both the sales volume as well as the price is likely to go down in the near term. So that is said next. So we also did a little, we did more survey of the people who are who are realtors, who just get idea of what they think. So basically, we had the California Association of Realtors had a flash poll between March 14 to 16. That's before the shelter-in-place happened. There's already about 54% of the realtors had clients who backed out from the buying a home because of the virus, and about 45% clients backed out from selling. So as you notice, both seller are back from the market and buyer also back from market. Seems like a buyer is a little bit more just because just from this flash poll, but remember that's just a snapshot of a flash poll. It doesn't represent every number, but it gives you some idea, how it's impacting the both sellers and as well as buyers. So now we did see the delay of closing, but the good news is everything's still moving forward for house that's in the contract. It's getting close and it's getting, transaction moving forward. Appraisal is working right now, even though speed is a little slow, but it's all going on. And then, you still lots of buyers, once they're in contract, they still commit to close. So that is on the positive side. So on the other side, there are some buyers postpone because of the uncertainty. So that's, it is mentioned to you that in the short term, very likely you're going to see, a big decrease in volume as well as in the price. So that is at the state level. Now, I also want to spend some time telling you about what happened in the mortgage market, because a lot of buyers and a lot of people who are thinking that as soon as the federal government, Fed fund reduced rate, mortgage rate is going to increase. It's actually not the truth. It's not, things doesn't happen this way. As you notice, I give you the chart here, you see the 30-year fixed mortgage rates. It's getting very volatile since March 20, up and down. That's, and also you see the application for purchase is reduced after March 20. Now, people is going to ask me why I get a lot questions, why the Fed fund rate goes down, but the mortgage rate doesn't go down. Now, mortgage rate is a little more complicated because it also related to liquidity and also the risk that lenders facing. Now, one of the situation the lender facing is, so there is basically if you, for example, there's this relief for the people who's paying mortgage. A lot of lender allow the borrower to suspend your payment of mortgage for as many as 6 months. Say if you had any difficulty because of the virus. However, when you don't need to pay for 6 months, the servicer, which is the person which is actually the, I shouldn't say person, it's an entity, it's a company who service the loan to the investor, they still got to pay investor every month. Now, the mortgage servicer has a lot of situation right now, because if they don't get, if they cannot collect payment from the borrower, at the same time they have to pay to the investor, they are facing a shortage of the funds. So on the other hand, the lender, given they have already lots of loans, some lender also serve as a servicer, for risk control and for liquidity. That's how you see the rate actually, the mortgage rate didn't go down, it actually goes higher over the past few days, especially as you can see, it's very volatile, especially for jumbo loan and for high balance conforming loan. So contrary to what most people think, it doesn't go down. It's very, very, very volatile, as you can see from this chart. So that also has impact on when you are buying a house. So if you have only 5% or 10% down and you're getting a jumbo loan, you probably have much less choice now compared with before. So that's another impact that if you have a small down payment, you want to pay attention to. The next, I want to share with you a very relevant data for Santa Clara County. I give you the data that shows over the past 1 year, active listing every month versus the sold listing. Now, as you notice, the active listing, I have the March number listed here because the March number is so recent that it hasn't reflected in the chart yet. So I give you the March number. So March active total is 1345 units in the whole Santa Clara County. That's how many units on MLS that's for sale. And the sold units is 948. So overall number in March is not that bad. It's still holding well compared with February. And one thing you do notice that this year, as you can see, January, February, even March, the inventory, the house for sale is way less than January, than the March timeframe than the spring last year. The second thing is new listings that was listed on MLS from March 1st to March 13, actually to March 16, is only 334 units, which was reduced quite a lot. That number is 726 units in 2019. And the new listing that is on the MLS from March 17 to March 31st was reduced further to only 297 units versus 605 units compared with same period last year. So these are all very important numbers that give you idea on what is the market right now, how it's likely to be in the next few months. For March sold units, I specifically pull out for you the ones that's listed in March, and 145 units sold for the sale date before March 17, and only 28 units sold after March 17. Major reason is because people cannot see the house, because after March 17, literally all the showing activities and open house is really gone. You cannot do the open house. Everything's virtual, majority are virtual. You might be able to show by private appointment if the house is vacant. And for units, these are also these are the sold ones, meaning they are the closed escrow one. That means not only you're in contract, you already closed the deal. Then I want to show you those are in contract, but it's not closed the deal yet, meaning they are still doing the loans and trying to get the deal closed. So as you can see in March, the sale date from March 1st to March 16 is 410 units. That's compared with 626 units, same period in 2019. And the sale date since March 17 is 313 units, compared with 647 units. Now, out of this 313 units, only 75 units listed after March 17, and about 203 listed on March 1st to March 16. So as you can see, the number was reduced quite a lot in terms of the transaction that's in contract, as well as the transaction that's getting sold. So one of the reasons is because inventory was lower compared with last year, and then major reason, as you can see, because the breakdown number I showed you, the activity levels reduced a lot. People literally all stay home. We cannot go out to see houses. And another data I want to show you is Santa Clara County Listings withdraw and cancel. Withdraw and cancel give you a good idea. So first you look at withdraw from March 17 to March 31st. As you notice, there are lots of houses withdrawn. There's about 116 units withdrawn during just that 2 weeks time frame, compared with only 3 in 2019 and 2018 is 0. And if you look at the canceled ones, again, the number is pretty high, 129 versus 84 in 2019, same period, and only 47 in 2018. So these are the numbers very important to pay attention to. Why it is important? Because lots of withdrawn, lots of cancel, they are going to come back. And because I went through the notes of all these withdrawn listings, a lot of them actually say they're going to come back after the shelter-in-place order is lifted. So these will be suddenly coming out after the shelter-in-place order is lifted. It's going to add to the inventory pool for sale inventory pool after that. So 116, 129, that's going to add on top of the inventory for sale. And next, I want to show you the listing transaction that fell through. Now, fell through are the one that's in contract already, but for some reason, the buyer and the seller, get it canceled and didn't close the deal. So hence the transaction fell through. Now, as you notice, 2020 March fell through is 167. That's compared with 105 in 2019, same period, and 83 in 2018. And I give you 2018 and 2019 number both because 2018 is a very hot market. 2018, February and March actually is a peak, is the highest point for the housing price in our county, Santa Clara County. So you have some reference. And 2019 is a slow market. Isn't as slow as back in 2008, but it's much slower compared with 2018. So that give you idea, give you some reference. You know where we are. 167 fell through. And compare with also February and January. Notice February and January is how good the number is. 64 fell through only versus, compared with 2018 is the peak time, there's 72. We have less fell through compared with the peak time. And January is 59 is about right. So you see, more transaction fell through in 2020 March. And if you notice the period that's, happening after March 17, sheltering place in order, out of this 167, 89 fell through after March 17. So that's give you some comparison, versus same period of 2019, 2018. So we have more than usual transaction fell through. But on the other hand, we also have seller pulling from the market. As you can see, the previous slide, I showed you more withdrawn, more cancel. So compare with, the buyer side, because fell through a lot of times is initiated by the buyer. Either their loan had an issue, appraisal had an issue, or sometimes they just get cold feet or they had uncertainty, right? So I give you buyer side and seller side pictures. So now, these are what happened. These are the numbers as of right now. So all of you are going to ask me, what's going to happen, where the market is going. So a few key important things to consider. Number one, how long it will take to have virus spread in control. So if it's very long time, if it's few months, it could take more damage to the economy because there are a lot of chain reaction could happen. So the longer the economy gets shut down, the more complicated implication it's going to have on different segments of the economy. And the next thing I want to ask you to think about is we are here in Santa Clara County. We actually, a lot of companies are much better off compared with other industry because tech companies, a lot of us still can work from home. The company is still working and still alive versus service as well as retail, hospitality, that hits much more. So overall, if you look at the NASDAQ is holding well, much well than S&P and much well. The index is much better than the Dow Jones. So here, the tech industry, tech company, overall holding better than other industry. Now, a few things, it depends on which company it is. Now, a few things you want to pay attention to is the company solely rely on advertising revenue. The company's product facing consumers because advertising revenue will be reduced because a lot of companies would not have the budget to spend on advertisement. And another thing is, if your product is facing consumers, it depends on if you are online. If you do lots of online transactions, that might be a good thing on the other hand. But if you require, like Lyft, Uber, you need a consumer to be on the spot, it will be impacted more. So depends on what segment you are in. And also another thing is how large the company is, how much cash flow the company have to go through this difficult time. These all have impact. And ultimately it gets down to whether the company is going to lay off people and how many people they're going to lay off. If the company holds well, there's very minimum layoff, then we're going to be fine because people still have income and the demand and supply can bounce back very quickly as soon as the activity resumes to normal. However, if it gets impacted more and you start to see more layoff, then that could have more impact on housing market. There is a website, I think it's called candle.com. It's quite interesting and actually tell you a lot of information, give you the breakdown of the information of which company is laying off, which company is having hiring freeze. So if you want to have that, if you're interested in this information, let me know, I'll send you the link. Next thing is how stock market price is going to be, I mentioned that already. So far, NASDAQ index is holding well, but it's still compared with before. I know people's stock pricing getting lower, that impact their down payment, that could impact your reserve funds. So again, the stock market has more impact to our market compared with many other markets. These are other things I think you want to keep an eye on to decide your decision. Whether you buy, sell decision, that's an important factor to look at. The next very important factor is supply versus demand. So as I showed you all the data before, ultimately it gets down to supply and demand, meaning whether you have more seller or buyers once this thing goes over. Because as you can see, both seller and buyer are all withdraw from the market, not just the buyer withdraw, sellers withdrawing as well. So in the end, if more seller withdraw, you tends to see less listings compared with buyer's demand. In the end, pricing might holding strong, but if you have more withdrawn from the buyer side compared with the seller side, then the pricing is going to be impacted more. Now, I put this quote here. This is basically what the California Association of Realtors, their forecast. They said if economy had a strong the economy had strong fundamentals coming into outbreak. As I showed you before, the data, right? We have very good data just by looking at the housing segment. And the recovery could be swift and robust if the virus can be controlled in the next 8 to 10 weeks. So the shorter the time, the better. But if it's longer, then it could have more profound impact on the economy, because there are a lot of chain reaction. Every industry, a lot of times are related, and that could have more impact, negative impact on the economy. So that is a few things I think you want to keep in mind and monitor what happens in all these few items. So next I want to talk about now what to do. Buyers, if I'm buying, what I'm going to do, what I'm selling, what I'm going to do. So if you're a buyer, so think what type of buyer you are. Are you investment buyer? If you are buying as investment, maybe you could hold a little longer to see how it goes. If you are buying because I'm renting anyway right now, I have to pay few $1,000s every month, like $3,000 or sometimes even more to rent my house. And I have my cash flow ready. I have sufficient cash flow to support my 6 months living without any issue. My company is solid. My company is like large companies have, I saw that Facebook, Google all holding pretty well. And it seems that they have sufficient cash flow to go through. And I even see that Facebook has more activities than before. So if your company is also doing very well and you are renting right now, that could be a window you can buy. And because you're going to pay the rent anyway, based upon the past experience, like when we go back in 2008, the housing market was really, really bad at that time. The rent is holding very well because if people don't buy, they still need to stay in a house, so they need to rent. So if you're renting right now and you have sufficient funds, your company is doing well, and go out to look for a house. And if you see something you like, that could be the time you don't need to facing any competition. At least for the next, right now 1 month-ish, you don't have any competition. And if you are this type of buyer, I think you could keep looking. And also, if you're buying, looking for the type of house that allow you to live in longer term, 5 years at least, maybe longer, so you can be more assured that you don't worry about the up and down volatility of the market in case that happens. And if you say, I just want to wait, now I think one question you need to ask yourself is how long you want to wait, and what's going to be the situation that's going to impact you. If you say I want to just wait for a few months versus I want to wait for a few years. If you say I want to wait for a few months or even longer, then I would suggest to do analysis to compare your cash outflow, buying versus renting. That's going to help you to understand which option is better for you in terms of your personal decision. Then you can come up with the sound solution for yourself. So on the buyer side, these are a few things I want to remind buyers. Now on the seller side, again, look at yourself, your situation. Do I have to sell? If you are still living in the house and you are moving up, you say, I need to sell my current house to buy another one. You still, you don't need to sell right away, but you have the funds to buy the next house, and yet at the same time you don't need to sell your current house, that might be a good opportunity. You can look for, like Sunnyvale, Cupertino, Palo Alto, those places have good school, single family house. If the pricing is reasonable, they always have demand. So that could be good time you see if anything that you might get, assuming you have enough funds to buy without selling your current house, you can hold a little longer. And if you don't have to sell, if you're like, okay, I can keep my house for a little longer, then look at compared option, whether sell or rent, which option is better. As I just talked before, rent is still going to be in demand because people don't buy, they need to rent. So if you are in the position, either sell is okay, rent is okay, then do some comparison. And another thing is look at what's your pricing expectation. Is the market giving you the expectation of your pricing? Does that mean you need to wait a little longer to get the pricing you want? So these are the analysis the seller you need to do before you make any decision. And if you decide you want to wait, ask yourself how long you can wait. Again, very important to look at your cash flow. Assuming if you rent your current house, you are living in another house, compare, check how much of your monthly payment get covered by the rent. Is that sustainable? How long you can sustain that? The second consideration is tax consideration. Is there any ramification on tax? If you already rented for 1 year, 2 years, and then if you rent more, you might lose the tax benefits of, $500,000 exemption for a couple for the capital gain. Again, sit down to calculate, is it making sense? I adjust my pricing expectation, factor into the tax benefits I'm going to get. The next thing is market can react very quickly. So just to be prepared. If you don't know what to do right now, we can help you to monitor, and we can work out a solution for you very quickly. It depends on which direction market is going to go. So the key is to adapt and act quickly. That's the part we can help you for the seller side. If you said, yes, I really need to sell because I cannot hold my cash for a very long time because I don't want to hold multiple mortgage, or I just don't feel like my cash flow is comfortable for me. We have a solution for virtual selling. So we do everything virtually. The virtual tour is done. We can even do virtual staging. The buyer go to see the house when the house is vacant. First, they see the virtual ones. If they are okay with the virtual one, that's great. If they need to go to see the house, we make sure the house is vacant. Measure is safety. It's very important that everything's good for the buyer to see, and only that one person at a time, 2 people at a time, not many people, just very, very limited. So by appointment only, so that we can do if you really need to sell in this market. Now, the good thing is housing is still moving. We still have offers received, and we still have people looking for houses, even though it's a very small amount, but it's not completely stopped yet. It's just reduced a lot. And appraiser is still going out to the appraisal, even though the speed is slower. We had a few deals just closed last week, so it's still moving. It's just much slower. And if you're a seller, the pricing expectation, I would say you will need to make some adjustments on. It's not going to be competitive like in January and February. So these are my advice for sellers if you are here listening. The next I want to also talk about now. For some seller, you decide you don't want to sell, you want to rent, or if your house is already in renting, if you're a landlord, a few things that you want to be aware. Now, Governor Newsom issued an executive order banning the enforcement of eviction orders for tenants affected by COVID-19. So just bear in mind, it's enforcement of eviction order for tenants affected by COVID-19. It doesn't mean any tenant can stop paying the rent. If you have a tenant that's impacted and they ask for relief, so make sure that you document. You just make sure that document their difficult situation, both for the tenant as well as for the landlord. This is important. Another thing is they're still obligated to repay all of the past due in a timely manner, and could still face eviction after enforcement moratorium is lifted. So they get a relief. Doesn't mean they can just not paying it. And another thing is if you ask for relief, you need to have a reason. So a few things that counts as a reason. So number one, so I'm going to go through this one first. So if your tenant asks for relief not paying the rent, so ask your tenant first to declare in writing that they cannot pay the rent. And number two, and ask a document to prove that they got impacted. And these are the documents you want to keep in file because it's important for, for your filing for tax credits and for if you want to, later eviction proceedings. All these are very important to keep the document. And then you want to have a traceable record of payments between January and April to show the change of the rent. So that's very important for the document side. If you're a tenant, if you said you cannot pay the rent anymore, just make sure you document those as well. And that's also going to help you to just when you are facing, when evictions coming, that you have the document showing that you do have the difficulty. So it's a protection for both you as well as the landlord. And in case that something that happens that you need to eviction or something, again, I would advise if it's your situation is very complicated, definitely consult a real estate attorney. So to make sure that the eviction, you understand eviction ban is only for tenants with these situations. It's not like everybody can just stop paying rent. That's I want to make sure you're aware of that. So these are the few things I want to share with all of you. And I want to leave more time for you guys to ask questions and answer your questions. Do you currently see difference in price jobs in neighborhoods with not so good schools? Yes, I definitely see that. So the house that's have very good location, very, very good school, very good layout, they are always in demand in any market. And as long as the seller's expectations, right, is not super crazy pricing, yes, these houses are holding much better than house in a worse neighborhood. For example, if your neighborhood already very slow, even far away, and layout is not good, and they tend to see more impact. It's very, very similar. So it's very similar when you see this happening in the downturn when the market is down. When, back in 2019, when the market is not very good, houses that's very good in, those houses that's everybody loves them, natural lighting is good, layout is good, location is good, single family with large lot in good school tends to get sold faster. And if the house was next to highway, next to power line, had major issues, tends to sell slower. So we see that as well. It's just this time is different in the sense that it's because of activity level dropped, you tend to see the things get slower, like everything is getting much slower pace compared with before. So the next question I have is, a house more than 2 million being affected differently than lower priced house in Santa Clara? So I think depends on, so house more than 2 million. So here, house more than 2 million, I think it's up to 2.5 million. It's more like one segment. If it's over 2.5 million, it depends on where you are. So for example, Sunnyvale, usually 2 to 2.5 million is most of the houses are in Sunnyvale when you are having good schools. But if you go to Los Altos, it's over 3 million overall in that price range. It depends on, it's every neighborhood has its own entry level pricing and it's also higher level pricing. So in every neighborhood, entry level pricing with house with good condition is okay. But if you go like 3 million, 4 million, the luxury house, that part, most of the people, it's not for people who really need it for they are living, that, yes, that get impacted. And also because of overseas investors much less. The luxury part, that over 4 million is much slower. 2 million depends on, because 2 million here is more like a higher level of the middle tier house. It's not a super high end yet. So 2 million, everything's good, it's still have demand. So one of the houses that was in Cupertino priced pretty low. It's very, very rundown houses. And they listed for about 1.2, but if it's Cupertino school and was sold by it's a probate sale. They got 21 offers, all cash, and sold about 1.5 million. house was really shabby. It's literally falling apart. So demand is still out there, and it's just, you know, things are getting slower, and then activity cannot going forward because of the stay-at-home requirements. So that's for your question. Hopefully, I get that answered. The next is, do you expect new home prices to go down? So new home, I think every new builder is different, depends on their particular situation, and also depends on how many inventories they have, and it depends on how many houses they need to sell in that particular release. So I think given the current market, because before this happened, a lot of new builders start to pick up. They give less credit, less incentive for them to negotiate on pricing. But with this thing happening, you know, I think certainly I would if you're interested in a new home, I would give it a try. You know, try to negotiate with the builder to see what they say. Again, every builder could be different, and also it gets down to that particular unit you are choosing. Because if the unit already on the market for a very long time and builder wants to offload it very quickly, you might have more ways to negotiate. And also depends on every builder is different. If the house, if they haven't even built it yet, if they are just in specs, haven't even built it yet, and they may not even get released yet, probably you don't have that much room to negotiate on pricing. So every builder is very different again, and also it depends on the particular unit that you're choosing. So next question, I went in a contract for a house first week of February and deposited percent, also expect closing in June. Same value, everything going on, where are options should I? Okay, so I'm here to answer your question. So first you need to look at your contract, if your contract has any contingency or not. If you do have contingency, then yes, you might be able to look at what contingency you have to go back to talk to seller again. However, if you don't have any contingency, now depends on your personal circumstance. If you have impact, say you lose your job because of the COVID-19, or because, you know, your direct impact because of the virus, you may go back to seller and you reach agreement, because we had a new addendum that's created basically that accommodate this kind of a request. But again, ultimately gets down to seller, you have to reach agreement if you do not have any contingency. If you have a contingency and you don't want to buy the house anymore, then you will risk losing your deposit. Depends on the circumstance of your personal situation. So if you want to talk more, let me know. I really need to get more details of you and the seller situation to be able to advise more on your personal circumstance. So any sense for how much prices might decline? What is a big decrease? 15 to 20%. Unfortunately, I wouldn't be able to give you the specific number because nobody can estimate right now. It depends on, again, you know, how long this is going to last. And there also might be a possibility, I think for June, for the immediate, like immediate months after, probably you don't see any you know, major pricing change for the up and down immediately. It depends on buyer and seller, but really it's very hard to predict right now what's going to be the magnitude of the pricing change. Short term, I think that you're going to see definitely impact of the reduced activities and may impact the pricing. And in the long run, even in September, it's hard to say, because one thing could be, you know, there are a lot of people still need to buy houses. If job is still there, one of the aspects that could have impact is the pent-up demand. We see that happen from time to time. Whenever a bad market happens, people hold, and after that you see it just sudden bounce back very, very aggressively because the pent-up demand is released. So the pent-up demand could be there, and then it's likely to be, if everything goes fine, not too long time, pent-up, not mass layoff, you might see a pent-up demand coming back after this thing over. And this pent-up demand plus the normal demand could push up the pricing. This could happen if there's mass layoff, and last much longer. So I do not have a number for you for your question of how much price is likely to decrease. Next question is, how much of a loss in price value sale have you seen as of today for sellers? So the interesting thing is the house that's closed in March, as of right now in March, the housing is still, pricing is all okay. It's just a house that's in contract after March 17, very, very few in contract. As I showed you, it's about 20 some units in contract. These are basically very few listings on the market and very few activities. So we don't have latest sales data for the house that's in contract after March 17 yet, because very few houses that get sold during that period. So I think I probably will be able to get better information for you about price to sale value in about at least a few weeks once the March 17 to March 31st pending transaction get closed, then we'll be able to evaluate. But what I do observe is you don't need to have competition anymore. You don't need to, compete with other people for the house that's currently on the market. Now, seller and the buyer, you guys always need to reach agreement. And every seller situation is different. Some seller would rather not to sell if they don't get the price they want. So I do not see that data yet. I will share with you once I see more closed deals. But again, the fact that you don't have competition at this moment means the contract that the seller that accepted the offer probably will need to be a bit more realistic about the offer that's offer pricing coming. Next question. Are you seeing much foot traffic with off-market listings, or would it be good to wait for a few weeks to list off-market? So number one, right now, if you list a house on the market, off-market, you're not going to have, so first, the off-market listing always have less people see it because you don't reach as many people versus on the market listing. And if you want to list on the market, we can list it because literally MLS listing right now stop the counting of the days. Used to be they have this days on the market, the longest days on the market, the days on the market is going to be accumulate. But start from March 17, that clock was stopped. So if you listed in March 17, your days on the market is still 0 as of today. So, and then you just put it there, and if buyer wants to see it, they'll contact you, and then they will make sure that the house is vacant and then it's safe for the buyer to see, and they will see it. I just have one listing that, my one listing there, and I had 2 agents asked to see it just over the past 2 days. That house was vacant, and as soon as, because we listed on March 13, and then just a few days and then get into this shelter in place, so we cannot show anymore. But from time to time, we have people inquire about it, and have people actually go to see it. But traffic is much less. It's going to be much less. So, and it's going to, so you're going to be, will need to be more patient. It's going to be wait for a long time. But on the other hand, days on the market doesn't accumulate because the clock is stopped by the MLS. Now, another thing I want to make sure you are aware is, if you want to put a house on the market, I would recommend, if the house is vacant, that's okay. If you live in it, I probably don't recommend that, because I don't want you guys take a risk of meeting a person while you're still living there. So that's the caution I wanted to take care when you're deciding when you want to put a house on the market. What is the market status of new constructions? I just mentioned that new constructions, the builder is still selling. There are a lot of builders that they, have releases on the market that because of the situation get slowed down. So they are still scheduled showing. They all have, pretty much all the new builders have virtual tour that you can see, and you can go by appointment. So let me know which new builder you want to make appointment with. I can let you know their status and to help you to arrange a appointment. And we also have, the tools, the technology tools. So to make it safe for you to see it. For example, we can have the locker that allow you to open by yourself without other people there, so you can go to see it. And we also make sure, like a new builder's house is all vacant, so it's model home. For existing home, we all want to make sure that the house is vacant before you go to see it, so to make it safe for you guys if you want to see it. Next question, if we are already in contract with builder, what are negotiating points? If you're already in contract with builder, again, I would recommend you to go back to look at the purchase agreement you signed with builder, and also bring this up if you have any difficulties. If you have really, impacted by this virus, and you lose the job or you have difficulty, I would say, never hurt to raise it, to talk to the builder, to the salesperson at the builder. If again, talk to. At this question, I don't know who asked it, but if you are just going into contract by yourself, then I would encourage you to talk to sales person inside the builder's office. If you have an agent represent you, talk to your agent first. Or if I'm your agent, just let me know. I will be happy to look at your situation and see what are your specific circumstances, and to see if we can go to talk to the builder for you. Santa Clara County, yeah, I did see the number is over 1,000 today, and might be more. So I think, yes, if we have lots of, the more people, the more impacted people numbers are, the more people getting nervous, and then the more likely we are going to be staying in this shelter-in-place period. And that's going to impact I think if it takes very long and a lot of people impacted, yes, I personally think it's going to have impact on the price, at least in short-term period, in that period. And after that, we'll see, how the shelter-in-place is going to last. And Santa Clara County, so far, even though we had over 1,000 cases, so far we are overall is, much, much better than New York and other places. So I think if more numbers and the more people get infected, I personally think it's going to have more impact, at least in short term, on people's psychology. I mean, we'll have buyers and sellers will all have more anxieties, and it's going to definitely have more impact and make people more worry about going out, or even just thinking about doing it. So yes, I think to answer your question, that's my answer. That's why I said it's important that we keep monitoring the situation, and also adapt and react fast. But all in all, in this type of environment, number one priority is the personal safety. It's always important to be very safe, to keep yourself safe. That's number one important. Then buying, selling house is always less important compared with your personal well-being. So that is no question about it. That's what I want to make sure you guys all are aware and on the same page. So and then if you are thinking about short term, like in the next 1 month, 2 months, then I think yes, probably you need to really adapt and react. Depends on how market goes. And if you are able to hold in a little longer term, like it goes into autumn or winter, then that could be a very different situation. Depends on how this thing evolves. All right, so I guess that's all. If you don't have any further questions, or if you prefer to talk to me in person, if you prefer to talk to me offline, I am open to schedule a one-on-one conference call or schedule a video call with you, whichever you like, just to help you analyze your personal situation more, regardless, what your thoughts are. And if you just simply want to chat with me because you just have anxiety, you cannot manage, feel free to do so as well. As I said, anything I can help, just give me a ring, and or just email me, text me, any means. So I would be, if anything I can be of help, I will be happy to help you. And meanwhile, just stay safe and stay positive, and keep exercising. You have a lot of time at home. Manage your time well, and then I'll probably try to schedule something in a few weeks again to give you guys more updates. And any feedback about today's webinar, feel free to email me or just to call me. I would love to hear that. As I said, this is my first one. I'm trying to learn new ways to help you guys out there. And I'm trying to utilize this new tool. So if there's anything I didn't do very well, I will certainly be very happy to make it better next time for you. All right, I guess that's all for today. I'm going to close this one right now.